here. We have two great speakers with us today, Lisa Stuart and Craig Cheston, and we're going to have them do their introductions. At the end of this call, I will give you guys some updates of what's on deck for the NHRC with the upcoming events. But welcome, and we're glad to have you.
Thanks, Katie. So today we have an agenda, as everyone does. So first we'll go through our introductions, talk about a couple of different benefit ideas, things that we would like to kind of go into greater detail. Obviously, this is going to be shared out so you can look at it in more time when you have more time. But first and foremost, introductions. Craig, I'm going to let you go ahead and introduce yourself.
Good morning. Thanks, Lisa. Hi, my name is Craig Cheston, and I'm a benefits consultant with USI. I've been in the employee benefits business now for 28 years. I cut my teeth on the carrier side, as I tell people, to see how the sausage was made. And for the last 18 years, I've been working for some specialty companies and doing consulting for the last 10 years. And look forward to speaking with all of you this morning. Thank you.
Thanks, Craig. And I am Lisa Stuart. I'm an account executive at USI. I've been in the employee benefits region for about 14 years, started at an insurance brokerage firm, literally processing flexible spending account claims, and then went from there to administration to account executive. I did take a couple of years stop in human resources, managing benefits for a couple different universities. So I'm familiar with your pains in your world, but then decided going back to the broker world is really where I felt that I had the most desire to be. I really enjoy the complexity of different groups and things like that. So excited to talk with you all today, and thank you so much for letting us have this time with you. So jumping right in, the point of today's conversation is really just to talk about different benefit options that you may not be familiar with, things that are kind of latest and greatest in the industry that help you to build a more robust benefit offering to your employees. So first on the docket is direct primary care. Oh, I did want to say, if anyone has questions throughout the presentation, please feel free to unmute yourself and ask questions as I'm speaking. I like that. I do enjoy the back and forth conversation, so don't feel like you can't, or you can put your questions in the chat. And Katie did say that she would monitor that and let us know if there's questions in there. So direct primary care is kind of a really new idea and thing that is out there in the industry, basically because, as most of you are probably aware, there are many barriers that happen with our current healthcare and the way it's available. A lot of people will not go to the doctor because of different barriers. Maybe the out-of-pocket expense is too high for them. A lot of times they don't have the time or the ability to engage with their primary care provider, going into the office, making an appointment. Those kinds of things really make it difficult. So a lot of people will just avoid care altogether. We're looking at a possibility of a shortage of primary care physicians by 2034 of between 17 and 48,000, less than what are in the industry right now. Typically, when you see a primary care physician, you only spend about 18 minutes with that doctor. And that's really not enough time to truly have the doctor understand what's going on. And so a lot of people, due to that time that they spend with the doctor and the fact that they wait up to about 2 weeks for a doctor visit, will just say, you know what, forget it. I'm just not even going to see a doctor. So the goal of direct primary care is really to remove the barriers to care, to kind of take some of those issues out of the mix. The cost for direct primary care is typically lower than your average copay and deductibles. Your wait time to see a doctor through direct primary care is less. So that kind of removes that inability to get with a doctor. And quite often the direct primary care happens through virtual visits. So it's a lot easier, right? If you're working, you can take your phone, you can go to a place that's more private, have your visit, and go right back to work. Or a lot of us working in the remote world, we literally can just sit at our desk, do our primary care visit, and move back into our normal world. Excuse me.
Lisa, there's a question that came through just asking about what you think the average increase is going to be for 2023, because we're hearing across our peers that there's going to be increases this year with inflation and everything else that's taking place.
Craig, I'm gonna.
Yeah,
want
yeah,
that
I can take that. Yeah, no, is asking about that. I can tell you that Blue Cross Blue Shield specifically has been telling us that on average, their increases will be coming out between 7 and 9%. But I will tell you that many of my clients are definitely above that 7 to 9% average. So it really depends on, obviously the claims are your claims per an organization, but also any change in your demographics. And, the other spike that we're seeing is a trending up of pharmacy spending. And so yes, I mean, there are increases that are going to continue. I don't think the increases are going to be as large as last year because some of the carriers miscalculated COVID and there was some corrections that were done. But one of the things that we do with our clients is we always have a plan in mitigating those increases, and we're always prepared for that with showing different options and things like that.
Thanks, Craig. Thank you for the question as well. Now, I apologize, I clicked on a different screen. So a lot of people wonder, how does direct primary care work, right? It sounds late and it sounds great, sounds wonderful, but basically what happens is when a person experiences symptoms or some kind of a need to see a doctor, the first thing they do is they go to their app. So most direct primary cares will have an app that's on the phone. They chat with the AI bot in most cases, let them know what are the symptoms, what's going on. From there, it is determined, do you need a virtual visit or would it be best to have a home visit? So one of the really cool things about direct primary care is most of them have doctors that literally come to your house and will do a house visit, right? Like back in like the 1960s, we're kind of moving in that space, but it's really nice because then the doctor, if it's necessary, will come to your home and do the entire exam for you that way, and then determine if you need diagnostic testing. That can happen either through the virtual visit or the home visit. And if that's necessary, they will let you know where you should go to have that done. But because you have that direct contact with that primary care physician or nurse practitioner, they then can reach out to you directly with those results in a quicker fashion than typically what happens in the normal care setting. Now, if they determine that there's issues that you have, maybe there's a chronic condition that they found through that diagnostic testing, you then will deal with that same direct primary care for that chronic condition management. So it's a really nice streamlined process. And when you're considering putting direct primary care in place, there are a couple of things that you want to keep in mind. You want to consider your employees' access to their current primary care. Like, how is it working right now? Are employees experiencing difficulties? You want to find out their utilization of preventive care. So actually in a couple slides, we're going to talk about more of that that utilization of preventive care. But when you see how that's working, that can give you an idea of if direct primary care will work for you. You analyze the geographic necessity for access to home care. Like, for example, where I live, access to home care is not very optimal. There's not a lot of doctors that would come to me, but those that are in kind of the more full geographic areas would have a better access to home care. And of course, then financial barriers, like, are there barriers right now in your plan design that keep people from accessing their primary care doctor? Excuse me. And then you want to evaluate any implications that could be within the wellness incentive strategy. So those are the items through direct primary care. Craig and I can work with anyone if you're interested in more details, more information about direct primary care. But that was kind of the first topic. Craig, do you have anything to add about direct primary care?
I was just going to add, for those of you on the phone, I mean, the direct primary care is typically for those organizations that are self-funded. And, we have had some success with fully insured groups, but again, that's, the devil's always in the details. So it's a good concept, but it may not work for every employer out there.
Thanks, Craig. The next item, and I know many people have heard about high deductible plans and kind of how that works, but we do look at it from a little bit of a different perspective in the high deductible funding strategies. So as I'm sure you're all aware, many employers are starting to take a look at, are they buying too much insurance, right? Are you offering super low deductible plans where your employees really don't have a lot of skin in the game. And from there, they're just using the heck out of your plan, which is causing you to have many high claims, and your claims are going up, and year over year, your premiums are going up. In that case, I know many of us have looked at high deductible health plans. For this, what we like to consider is how many people are actually using or hitting those higher deductibles, right? So if you're putting a high deductible plan in place, the graph that you see on the screen is a really good indicator of the average of percent of members that are using the plan by claim size. So 75% of your members typically will incur $4,000 or less in claim expense. But then you have that 25% that's going up and above that $4,000. So when you have those lower deductible plans in place, you're really over-insuring the majority of your population. So what you can do is you can put in a high deductible plan and then fund through a health reimbursement account. I know many people have considered the HSA concept, where you have the high deductible plan and your employees then contribute to an HSA, and maybe you contribute something as well. But those dollars that you put into an HSA for your employees always go to your employees, even if they don't use them. When you are funding through a health reimbursement account strategy, you are taking a potential risk. So you're putting a dollar amount above or on top of that deductible that they have. And if they use it, then the money goes to them. Otherwise, the funds stay with you. So typically the utilization on a health reimbursement account is between 30 and 50%. So let's say that your total all in was going to be $350,000 in potential deductible expense. Looking at it from the perspective of a 50% utilization, you would only actually be spending $175,000 for that full deductible expense to the employees. So that is better than if you were funding on an HSA. $350,000 is going to be $350,000. So the way this works is your current plan obviously has co-pays for your doctor visits and urgent care and x-rays and prescription drugs. What you do is you put the high deductible health plan in place, and then you can actually create a health reimbursement account where the member pays the same kind of co-pays that they were paying, but those are part of the health reimbursement account. And then when you look at it from the perspective of how it is funded, right now, your traditional plan, you have your premium, which is in the blue, and then the gray is the employee's portion of the plan that they're paying. Now with the high deductible plan, as you can see here, you've got the blue goes down a little bit, right? Your premium goes down, but then the employee's expense goes up. When you have the health reimbursement account, you have the employee's expense isn't quite as large. So it kind of gets to where it was with the employer premium. But then in that green there is where you have your HRA funding. And then the red is really the savings based on the potential utilization, as opposed to on the fully insured employer premium low deductible plan, your total expense. So at the end of the day, you'll win, your employees will win because they're still experiencing that same amount of expense that they had before, but their premiums can also be lower because the premiums on the plan are lower. Does that make sense? Has anybody put anything like that in place? Any questions? Craig, do you have any comments on the high deductible health plans? I see you're thinking.
Yeah, no, I would just say, really obviously, as you mentioned, the high deductible health plan, I think a lot of us are very familiar with, but the health reimbursement account is a different concept. And, as Lisa, threw a lot of numbers out at you, I think that the best way to do is to model an individual group because every group is different. And it also depends on, a lot of the concepts that we're talking about today really depend on the culture and the strategy of the organization as well. Yeah, the health reimbursement account can work and works for a lot of our clients out there, but for some it is a newer concept, and it's all about, education and, again, the modeling to look at the numbers.
Thanks, Craig. Now, moving kind of outside of plans and more into some different ways that you can engage your employees on a more holistic basis. is family forming. Now, I know a lot of you are familiar with the term family planning. The politically correct terminology now is family forming. So when I'm speaking on family forming, that's what I'm talking about. And basically what we are looking at in the industry is there are some new issues that have arose from family forming that we weren't seeing before. Typically employees are waiting later to have babies, or I'm sorry, for family forming. See, I just did it. But when it comes to having babies, when people are waiting later to have children, there's a higher cost that's associated with waiting later to have children. The maternity costs have doubled. A lot of that, again, is because of waiting, and also because a larger majority of babies are being born through C-section, which does cost more than a traditional birth. When you're looking at this expectation, a lot of employees are concerned about what they're going to do when they have the baby, what's going to happen, or when they adopt a baby, how are they going to manage going from work to home and all of the things in between. In the bottom left corner, you'll notice there's a little sources. If you have this PDF when it gets sent out, you can click on it and source all of the pieces of information in here from where we found them. Just wanted to kind of point that out. Now, when we're thinking about family forming, there's so many different things that are in place, right? You've got IVF, you've got return to work, you've got reproductive health, childcare, which should be a bigger box there, I would say, because that's kind of one of the biggest things that your employees are facing as they're considering starting a family. What are they going to do in terms of balancing work, life, children, all of the above? What we can do at USI is help form a solution for you. So if you're wanting to put something in place for your employees that makes sense and helps them kind of manage the entire landscape of having children, adopting, family forming, all of the things that go into place, you can put in different solutions and we can help you with that. Maybe it's something simple, such as looking at resources and coaching for having natural birth and then infertility. Or maybe you're wanting to put, and you see all the circles there. This is kind of like all the levers that we can pull for you. A lot of clients have been wanting to put in a full holistic, that's that yellow circle, that literally talks about every single item, put something in place for every part of family forming. And we can do that for you, everything from maternity to pregnancy to post-delivery, breastfeeding support, breast milk shipping, postpartum care. Things that a lot of employers really haven't been thinking about, but that employees are really thinking about. So we're here to help you with that as well. Excuse me, I'm so sorry. The impact here is huge. So the return on investment, when you put in any kind of a family forming plan, 1,000 employees with a 2% pregnancy rate, it reduces the cesarean deliveries 8 to 20%, which is a really big return on investment. The NICU admissions is also reduced by 25 to 35%. So when you have your employees that are more comfortable and calm and understand exactly what's going to happen throughout the process, have support, they tend to have less of the NICU admissions and less cesarean deliveries. And then from the clinical savings perspective, it can be a $22,000 to $32,000 savings on that side as well. So it's not just something you put in place to feel good and make everybody feel warm and fuzzy. It literally does have a pretty big return on investment. And at the end of the day, your employees feel very happy and warm and fuzzy. So you've got all of the above. Check the boxes. Any questions? Okay. Now, as I had alluded to during the talk about the direct primary care, another item that is very hot topic right now is incentivizing physician engagement. Now, typically, I know you've all heard about wellness programs, but there are some problems with their traditional wellness program. Listed here, you've got the standard solution and then the challenge associated with it. A lot of times what you have is if you do on-site biometric screenings, for example, there's diagnostic tests, they receive the results, and then nothing happens after that, right? No follow-up. They get their paper from whatever wellness program you've put in place, and it just kind of gets set in a stack, right, with the rest of the mail. Again, most of these, it's due to no follow-up. A lot of times what's really, really helpful is if you put an incentivized physician engagement in place. So what we have is a population health management team that can work with you to put together a really nice strategy to incentivize physician engagement. We have actual return on investment here that shows year over year what it can look like. You'll notice pre-USI, so pre-population health management team, typically the adult well visits, standard blood panel is about a 30% utilization, high blood pressure diagnosis, 20%, high cholesterol, 12%, diabetes, 7%. Now, year 1 and year 2, there's a little bit of an uptick. And then year 3, that circle in green is where you really start to have a better uptick in information or in people that are engaged. So the point is, you don't just want to throw it in 1 year and then kind of just like throw it by the wayside, but year over year, incentivized physician engagement really does have some meaningful outcomes. When you connect members to their primary care physician, either through direct primary care and through incentivizing their connection with them, there is really a reduction in total healthcare claims. As I said, it does happen year over year, but some of the things that are really reduced here is inpatient admissions, the emergency room visits, average length of hospital stay, and readmission rate. So the orange is when you have no preventive visit within the last 12 months. And the blue is when they have had a preventive visit within the last 12 months. And as I'm sure we're all aware, these 4 items are really what drive your healthcare costs. Those claims can be much higher when you have a lot more utilization of those 4 different factors. Now, once you have had your incentivized primary care visit, right, they've done their wellness exam, the next piece is medical management. So they find out what's happening, and you also incentivize them to work with their primary care doctor if there's items that have come up, especially things like the mammogram screenings, cervical cancer screening, and then the colorectal screening. So those items are big items that really need to be done, but a lot of people aren't doing them. You notice here the pre-USI is lower numbers. And then again, year 1, 2, and 3, by year 3, they have much higher utilization and even above the norm. So it's really, really important. Craig, do you have anything you'd like to add on these slides? I know when we were talking, you had a couple of ideas.
Well, I think just in general, this is a more of a culture and a wellness population health plan for employees. Our organization, we actually practice what we preach, and we really focus on, both employees and spouses going to their primary care physician. And we actually have letters from clients that, went to their doctor and during a stress test ended up having to be admitted, say to have, some sort of a surgery or procedure that basically saved their life. So, the key here is really the early detection. I believe there's another slide that Lisa has on that, but the earlier you detect something, the probability of, that employee being okay or a member being okay from a health perspective is greater. And also, from a cost perspective as well, the early detection is the real key.
Right. So exactly what Craig was saying, you led directly into the next slide. For here, we have an example of breast cancer. So if a breast cancer is detected when it is still a stage 0, not only is the cost so much reduced, but the chance of survival after the 5-year rate is at almost 100%, as opposed to if someone isn't getting their annual screenings and they find out later that it's a stage 4, not only is the cost to the plan so very high, but also the 5-year survival rate is 20, not even 25% of what it is if they are diagnosed at a stage 0. So through the medical management, through early detection, this is just one of those examples, and there's so many. I have one of my employee groups just put in a wellness plan this year, or population health management, full thing. You go to your doctor, you get a discount off your medical. If you're on the HSA, they put money into the HSA account. She went to the doctor and they found something in her, right? And she had never utilized the primary care in that fashion before. She had never done her annual screening. She'd never gotten blood work. First time getting blood work, they found something in her that now they can deal with while it's still early in its stages, as opposed to later, if you weren't going and then you went after you started having symptoms and things were starting to go awry. So it's just a real world example of how this really can have an impact on employees.
Lisa, and Craig, how do you start working on the change management, really getting your workforce to start making those behavior changes, that they are going to the doctor more frequently, or they are getting the tests? Because I think that's some of the battles that HR is facing, is they don't know. Again, you can do the flyer thing, you can get the postcards, but I feel like it needs to go beyond that for change management to take place.
Right. And one of the, go ahead.
Oh, sorry. I was just going to say, in my experience in working with current and past clients, over my experience, I actually worked for a population health wellness company, and we felt that, and we had statistical results, that when the C-suite really embraced the change management and were part of the change management and were leading from the top, that is extremely important. The other things that we haven't talked about, we talk about a diagnosis, we talk about a prognosis, we talk about the financial piece of it, the claims. The part that we also have to remember are those variable costs of absenteeism. So if someone does have cancer, they're not going to be at work, they're going to be at treatment. And then there's also something called presenteeism. While someone is sitting there, the lights are on, but they're not productive. So it impacts the bottom line greatly, but then it also impacts the physical health of our employees or your employees. So we're going to talk about this a little bit towards the end, is that communications are important, but Katie, as you just mentioned, whether it be open enrollment, whether it be a population health wellness program, sending one postcard once a year, that doesn't cut it.
Right. And for the wellness strategy, I think a big piece, which actually you again segued directly into the next slide, is not only the comprehensive communication strategy, but also making something in place that employees really feel, right? So for example, USI has a very, I don't want to say large, but it's a big incentive to do the screening, to follow up. And not only do you just do the screening, but for USI's plan, we go to the doctor, I have to go, my husband has to go, we get our blood work. And then if there's pieces within the blood work that aren't meeting those, standards, right? So your cholesterol's too high, you're obese, you don't get the points for doing that piece of the blood work. You then have to do other items like coaching calls. If you have the obese is there, or the cholesterol, you have specific coaching calls that you do throughout the rest of the year that help you to change your actions, to change your behavior, to get your health in a better state. So they don't just say do the screening and then you're done, you get the wellness credit. It's like a whole process throughout the year. They put in walking challenges, they put in oh my gosh, a water challenge, I think was one of them. There's many things to just keep you engaged in that wellness. So I think that really helps as well, right? Because I never stop thinking about my wellness program because I really want to save the money off my premium. So does that answer the question, Katie?
Yeah, impacting people's pocketbooks seems to be a very good incentive. So when you can tell them that, hey, if they go to the doctor, their employee contributions will be less, you're going to get people's attention. But along with the communication, but again, having leadership, lead and actually also follow the plan is very helpful as well.
For sure.
Thank you. That's very helpful.
You're welcome. Now, the last or second to last topic here is just some of the popular voluntary worksite products. So first we talked about, ways that you can put things in place to get your employees more engaged in their health. Then we talked about the population health strategy. Now talking about things that employees have asked for, things that employees are saying, these are pieces that we would like to see put in place. They don't really typically have any expense to the employer besides a little bit more administration, adding the plan to your benefit admin system, and then having the bill that you have to deal with on the payment side. But these pieces really tend to attract employees when they're looking at the full benefits when they're, considering going to a new employer. So we have voluntary benefits and then total reward benefits. Your voluntary benefits are typically 100% paid by the employee, and they can cover gaps in medical coverage, things like your critical illness, your accident, all of those types of items fall under that voluntary benefits. The total rewards are more like those extra pieces, right? So like your legal plan, your pet insurance, those types of items. Excuse me. And so here we kind of spell out which is which, right? So the total reward type benefits, pet insurance, identity protection, legal support. A lot of companies are doing the tuition reimbursement, financial wellness tools, which can be part of your population health management, and then employee perks and discount programs. So from the voluntary work benefits perspective, we break it out. You have the accident, the critical illness, and the hospital indemnity. All three of these types of benefits pay out a lump sum based on like a specific diagnosis, or if you are hospitalized or you have an accident. They're also supposed to be on a post-tax basis when the employee is paying for the benefit, so that the benefit is not taxed when they have to use the benefit or file a claim on the benefit. From the accident perspective, you can build it in two ways. You can have a 24-hour coverage which means accidents are covered whether you're at work or at home. Any accident that you have is covered the same way. Or you can have what's called non-occupational coverage, which is where only accidents that occur outside of those working hours or when you're not at work are covered. Things like hospitalization due to the accident, the ambulance. I think Becky's heard me say it during my open enrollment presentation. If I fell down the stairs and broke my leg, I took an ambulance to the hospital. I got a cast. They did an x-ray to find out it was broken. And then I had some follow-up visits with the doctor. All of those pieces separately, I file a claim with the accident carrier, and they're going to send me a check for the dollar amount of what each of those pieces was worth. I can use those dollars to pay for anything, right? I don't have to worry about, oh, are they going to tell me I have to use it just for my medical expenses? No, you can use it to pay the dog walker, since now you've got a broken leg and you can't walk your dog. You can use it to pay for some of those expenses if maybe you still have a deductible to satisfy, or you had copay for the emergency room, whatever the case may be. Critical illness plans are built similar but different to the accident plan. So you have very specific illnesses that qualify you for the critical illness benefit. And typically what you do is you enroll in a lump sum benefit, maybe between $5,000 and $30,000 typically. Whatever benefit amount you've elected, let's say it's $20,000. If you are diagnosed with one of the conditions that are listed in your specific critical illness plan, then you can file a claim and you can receive payment of that lump sum benefit. Typically, there's like a percentage. Some are covered at 100%, some are covered at 50%. Heart attack typically is covered at 100%, so we'll use that. If I have a heart attack, I can file a claim back to that critical illness carrier, and they will pay me that $20,000 benefit that I enrolled in. And because I'm paying the premium post-tax, I will receive a $20,000 lump sum check. It will not be taxed, and I can use it to supplement some of those medical expenses. I mean, maybe when I've had a heart attack, I'm obviously not able to go to work, might have trouble getting around, might need to hire somebody to help me get my house clean. I can use the dollars for anything that I need to help me with that because of what occurred. Excuse me. And then you also have hospital indemnity. What this plan does is allow me to receive a benefit if I were to be hospitalized. So if I am admitted to the hospital, the regular hospital or the intensive care unit, there's a different amount for each typically. I file a claim with, again, that hospital indemnity carrier, and they're going to send me a lump sum based on how the plan is written. And yet again, I can use the dollars to pay for whatever I need to. There's some examples of payable benefits, and then examples of what I can use the dollars for anything. They don't restrict what you can use the money for. And when I'm paying for it post-tax, yet again, I will receive that benefit with no taxation. So those are the voluntary benefits that people are really interested in. It's kind of like your Aflacs, but because it's on a group chassis, it does run a little different. You don't pick, Craig and I were just talking about this yesterday. You don't pick from like a suite of like 15,000 different benefit options. You really just have the benefit that's put in place through your employer. You can put it into your enrollment system, like your Paylocities or your payroll, Paycors, all of those. And the employee selects the benefit, and then it can send over to payroll, and they can make their payroll contributions that way. So you're not receiving a bill from Aflac, for example, and then having to plug all those dollars into your payroll system. It's automatically available that way. Any questions? Okay. And then we have the total reward type benefits. So these are kind of like your extra benefits. That's why we like to call them total reward type benefits. There's really not a very heavy lift for the employer. A lot of times these benefits can actually be put in place where there's a couple different carriers that the employee goes directly to the carrier site and makes the election, and they even pay for it through their own payment. But because you're offering it through you as the employer, they receive a discount on that benefit. So the pet insurance, the legal support, those types of things are available a little bit in that fashion. Or you can have it where it's payroll deducted, either way, but they're not ERISA plans, so they can enroll and disenroll any time of the year. They don't have to be enrolled for 12 months in order to have the coverage. Legal plans are where you can have access to legal services that you normally couldn't afford. So personal example here that I like to give, I have well, he's going to be 20 in February, but at the time he was still 18, and he has a lead foot, and he was driving very fast on the highway, and he came home and he was like, I got a ticket. And then a week later he got another ticket. And so I said, you're going to have to go to court. Like, you can't just blow it off. You have to deal with it. And he said, well, what am I going to do? So I called the legal plan that I have enrolled in through USI, and they literally sent a lawyer to court with him and didn't have to pay anything for it because I'm paying for the legal premium. And so it was really nice. They went to court, they got him supervision. Of course, I'm not going to, fix everything for him, but it was nice to have that available. Maybe if I got the ticket, I'd also have it available. It's just something that a lot of employees are really interested in and like to have that extra level of comfort. They can cover other things as well. Imagine that you want to plan your estate, right? It's about time for you to start writing a will, considering things that are going to happen after you pass away. They can help you with that as well. You can work with them on purchasing a home, financial matters, criminal matters. All of those things are available through the legal plans. And again, it's a post-tax benefit, so you don't pay for it on a pre-tax basis. And a lot of the services, like I said, are free or very, very heavily discounted. Identity protection is another hot topic, right? We've all experienced that the internet has become our friends. Everyone has a phone in their hand all the time. A lot of your information is housed in your phone, and people are very, very concerned about their identity. And what happens if my identity is stolen? We hear about it every day. People talking about how, man, I went to buy a house and I found out somebody's been using my credit. The identity protection is a really great option that a lot of companies are putting in place to help employees feel more comfortable. Craig was talking about presenteeism. When you have the identity protection, it actually can help with that a little bit, because employees don't have to have that worry. When somebody steals your identity, it takes so much time away from your regular daily life, right? You're spending hours trying to figure out what has happened and work with the credit bureaus and try to stop everything and deal with your credit cards and deal with the bank. The identity protection can actually do a lot of those pieces for your employees if something were to happen. So this is another feature that many employers are putting in place. And then you have pet insurance. So pet insurance has been a really hot topic with employees these days. COVID, we were all home. A ton of people bought new animals, adopted animals, whatever the case may be. And many employees are asking for pet insurance. They can go out and buy it on their own, but just like the other plans, when you offer it through a group, when you offer it as an employer, they can get a really heavy discount on the pet insurance. So it's really something nice for them to have at a cheaper price than buying it on their own. And employees just like to see that on their benefit guide, right? Hey, what coverage do I have? Oh my gosh, I can get pet insurance for my cat. Oh, that's great, right? They just like it. Even if they're paying the full premium, Getting that discount because it's employer offered is something that they really like. Any questions? Okay. Well, you can put all of the plans in place that you want to, right? But how do you effectively communicate that out to your employees? Craig, I'm going to let you take the next couple of slides and kind of talk about effective communication and how that can work with the plans as you put them in place.
Great, thank you. Yeah, communications, we feel are table stakes these days for employers. And, the first thing you need to do is you need to engage your employee population, and then you need to educate them. But we have to do this more than once. As I mentioned before, just sending a postcard out for open enrollment or for wellness program is ineffective. So I think the important thing is to understand your population. Are they more boomers? Are they more millennials? And based on the employee population that you have, our recommendation would be having more than one medium or type of communication. Whether it be the paper postcard and the benefit guide, so putting that information obviously electronically, but then also using text messages, potentially microsites, using videos, and really having a place for your employees to go in order to get that information as well. As far as the messaging, sometimes it might be important to have different messages for the different populations as well. And also one of the things that our communication consultant here in our region in the Midwest is that, there have been studies, and you see the magic number of the right time of 8 times. I mean, the more time a message is put in front of your face, it takes almost that, 8 times for it to kind of sink in. So when you think about open enrollment and the importance of that, being educated about your benefits, and if we're only communicating this one time a year, you can't assume that there's going to be effective communication on the other end, that your employees are going to understand it. So we feel that having a monthly communication strategy is important. So think of it as a benefits communication 101. Obviously, you're going to speak more to open enrollment. If you're putting in a health reimbursement account, you can't assume that your employees are going to understand how to use that. For instance, if they have to file their claims. Same thing with a health savings account. They need to understand the value, that whether it's going to be funded or seeded by the employer. And if not, also there is the tax advantages, of which there are 3, of having a health savings account that employees need to know about. So next slide. So again, we talked about the different types of mediums, and obviously there's email campaigns, but there's a lot of employers out there, depending on their diverse workforce, that might say they're not in front of an email or a computer. Maybe they're driving a truck, or they're doing deliveries or things like that. Well, what about putting out a communication as far as a text message or having QR codes throughout? We've got a new client of ours that puts out a welcome box, and what we've created is basically it's a welcome card, if you will, or postcard, but there's a QR code. And when they use that QR code, because guess what? I don't know too many people that still have a flip phone. Everybody has, an Android or iPhone device. It's free to download a lot of the different apps that are out there. In fact, the one that we offer to our clients. But by snapping that QR code, we know that employees are a lot more apt to watch a 1.5-minute or under 2-minute video than they are to read an entire page of information. So again, it's not using just one of these types of mediums. It's using a combination of these mediums and at different times of the year. Next slide.
That's all the slides on communication.
All right, good. And I guess the getting back to the communications is that for the very small percentage of us who are HR benefit professionals, we know too much about benefits, it seems like, and we have to remember that the 99.9% of the population out there just doesn't understand it. And that leads me to just another statement that I think we're all aware of, but I always like to point out, is that especially here in the United States, Americans are challenged and are very poor purchasers and utilizers of medicine. And I use the example, if somebody needs a new TV, a new mattress, what do? You go out, you start Googling, you compare prices, you go test drive vehicles, and people aren't doing that. They get signed up because their physician says, hey, while you're here, go to our hospital and have your MRI done, and it costs $2,800. Where you could go to a self-standing MRI diagnostics, facility, which has the same type of equipment that the hospital is going to have, but they're going to charge you a lot less. And that's why there's different tools out there as it relates to transparency. And I haven't seen that yet. And again, getting back to communications, if you're providing and paying for these types of plans and tools, if you will, to assist your employees, they're not using them if it's not being properly communicated.
Yep. Absolutely. Thanks, Craig. Well, I think we've met our time. I'm excited. We didn't go over. Thank you so much for your time and attention. We will obviously send this out. I know that Katie has some announcements, but if you have any questions, there's Craig's email and my email. Please feel free to reach out to us. Love to have a chat, conversation, move forward.
Yeah, and I'd also like to thank everyone. I think for my closing comment would be that there's no silver bullet. We threw a lot of information at you today, and my 8-year-old son is taking cooking classes, and he's learning what a recipe is. And well, why do I have to put that in there? Well, it may not turn out as well that you wanted to if you leave out a couple of those items. And I think that that's important for an employee benefit strategy. And we wanted to offer that we're able to, to kind of do a benchmark so that you have an understanding of what your current program looks like and what it could be, because all organizations, even USI, we're challenged right now with attracting and retaining top talent, and it's important to understand what our peers are doing in the same industry, same size of employee and location. So thanks again for the opportunity to speak with all of you today.
Are there any questions for Lisa or Craig? Before we move into announcements, I just want to make sure everybody has a chance to ask anything else that they might have. All right, thank you so much for your time. It was very informative of the new trends that are taking place, and again, how to address it with your workforce with that change behavior that you guys were talking about, that there's multiple ways how you can reach your audience. So thank you.
Thank you for having us.
Want to let you guys know our next PDE is going to be on November 17th, and I'm actually going to be the speaker this time, and it's going to be talking about what's going on in the workforce. So we're going to talk about the last 2.5 years and then trends to find different ways of talent, right? If you're going through the same pools, you're probably seeing the same people. What we're going to talk about is non-traditional, and then some future things that are going to impact you as you start to build out your talent pipeline. So please feel free to register. We have it on our website. But again, thanks for everybody making time for us today to go over benefits. Again, thanks Lisa and Craig. And if you guys have any additional questions, I can stay on. But everybody have a great Friday Eve, and thank you for your time this morning.
Thanks, Katie.